Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be looking at a very interesting trend line that's been forming. We'll also have a look at the CME gap where one's just been closed and another one just being formed. I'll also have a look at the hammer candle that's been formed on the weekly chart and why that's an incredibly strong hammer candle. And finally, I'll have a quick look at the 60-day cycle to see exactly where we're at and where we're heading in the next few weeks and months. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Okay, so we're going to start off with this particular chart here. It's on the daily time frame, and we've taken it from the 25,200 support level here, resistance here, and resistance over here. So this is where we've just been to over the last month or so. And since then, we've just been making a downward trend all the way down to this level here at 19,500. And we've got our very strong support level down here on these support levels down at the 18,300 level. And this is where I was expecting the price to be finding support once more in line with this support levels here. So what's happened over the last few days is that we got that Silicon Valley collapse and the Silvergate collapse, which brought the price all the way down to this 19,500. So a natural place was going to be down here at 18.3. And that was based on, if you take the Fibonacci retracement from the low of 15,400 up to the 25,200, you can see quite clearly the 61.8 came all the way down to the 18,300 level. So as technical analysts, you would actually expect the price to come back down and find natural support down there. And of course that didn't happen because yesterday, as you can see, the US government actually intervened to save Silicon Valley. And immediately we got a big pump back to the upside all day yesterday, right up to around about 22,800. I think without that pump, I think 18,300 looked very inevitable. However, we always have to respond to what the action is rather than how we would think it should be. But the most interesting thing on this chart really is the development of this orange line here. Nobody seems to have spotted it, but if you take the orange line here from the support line over here at 17,500, and right along there you get a lot of support, resistance, 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 and over here when we were having this big rally up to the upside, we got more resistance on this line and more over here. And the interesting thing is, now that it's developed and it's turning into a very strong support and resistance trend line, what we can do is, it seems natural and inevitable that when we actually eventually break this head and shoulders pattern anywhere around here, if we move the chart to the left and we draw in another trend line based on these levels down here, and that's at 28,800, we can certainly see this trend line coming into play, that once we do manage to get above this very strong neckline over here, 25,200, we're going to meet resistance over here with this trend line. So that would seem a natural place for a correction back to the downside. So keep your eye on this trend line, which I've just drawn over here. And regarding the inverse head and shoulders, we've been looking at this for quite a while now. You've got the left shoulder over here, we've got a well-defined head over here, and now with this candle, this one that I'm going to have a look at very shortly, you'll see how powerful this is on a weekly chart, but we're now getting a well-defined right shoulder to the right here. And it seems inevitable and natural for it to come back all the way back up to this neckline to retest that and eventually break out to the upside. A quick look at the CME gap, and as you can see, we came all the way down from the 25,200 to fill this gap that was left behind. And I mentioned this gap many times in my videos as well as on my Twitter page, and that gap was at around about 19,950. So we came down exactly to that point there to fill that gap, only from yesterday to create another gap over here. And that's quite interesting because this may well be the place where it naturally comes back once we've reached our 28,000, maybe even 40 or 50,000 later in the year, to come back when it's a correction, to come back and actually fill this gap over here. For those of you who have been here for a while, since the last bull run that we had, and we got this low point at the end of the bear market in 2018, around the $3,000 mark, on our way up to the $14,000 mark here where we topped out, you can see we created a gap down here, which this candle over here came down to to exactly close this gap. And further along, we created another gap over here, but when we topped out at the 14,000, eventually we came down and actually closed this gap with this candle over here. And those with a keen eye will have noticed that we have another gap over here when we came down and created this one at 28,740. And this seems to have confluence with what we've just been talking about, that when we do have this move back up and break this neckline of the inverse head and shoulders, once we break that, the price is going to actually close this gap at least over here with this trend line that I've just drawn for you. So we'll just have to wait and see, but certainly there is this gap at 28,740 that is telling us that it's going to have a magnet to come back up to and to close this gap. Also tomorrow we can expect some volatility in the Bitcoin price, because what we've got is the CPI data for the USA coming out at 12:30 UK time. Last month's figures were at 6.4%. and the consensus figures expected tomorrow is 6%. So anything less than 6% should be able to give another big rally to the upside. Something significantly worse than that would actually give us another correction to the downside. We'll have to wait and see what happens, but certainly look out for the CPI data tomorrow. A quick look at the 60-day cycle. It appears now that instead of having a failed cycle as we were coming down here, what we've now got is, over the last 2 days, the development in the Bitcoin price means that what we now have is a good opportunity to create a right translated cycle, which is what you would normally get in a bull market. So whether that's going to be around these levels at 27, 28 or 30, but certainly we now have a very good opportunity to create into the mid-cycle point of the 60-day cycle, which ends in the middle of April, for a good run up all the way up to the $28,000 or even $30,000 mark here. So we'll wait and see what happens, but certainly the last 2 days' prices for Bitcoin has reinvigorated the 60-day cycle framework that we've got over here. A quick message to the members who are members of the Bitcoin Miners Analysis that we do on Wednesdays. As you know, I started 2 swing trades for both Marathon and Cypher, and those 2 trades are still intact. And it'll be quite interesting to know that with the Bitcoin price that have actually increased over the last 2 days, what impact it'll have on the 2 swing trades that I've got for Marathon and Cypher once the markets open at 2:30 UK time today. The members know what my targets are, and if you want to join the members group where we specialize only on the Bitcoin miners and do a specialist video on Wednesday, then all you have to do is go below any of my videos and click the join button over here, and if you've got a handheld device, there's a link in the description box below that will allow you to join from there as well. And this coming Wednesday, there's a special feature on another very small company which was in trouble during 2022, but seems to have made a very good recovery and has absolutely huge potential, maybe 50 to 100x in the next 2 to 3 years. So if you want to watch that video, then you can join this growing group that we've got, and the video will be on Wednesday this week. And as you can see, there's also my link here in the description box of the Twitter page. And usually in between my videos, I always post few bits and pieces of the technical analysis as well as some personal development stuff that I've got going over here as well. So if you want to join us on Twitter, then click the link below all of my videos in the description box. Just moving to the weekly chart, we can see something very interesting developing here. What we've now got is a hammer candle on a weekly time frame, which is extremely powerful. You very rarely get them, but when you do, there's usually a very big move to the upside. So whenever you get a hammer candle at the bottom of a trend, you can get a similar candle here, like the Dragonfly Doji candle, and you normally see a big move to the upside over here. Similarly over here, you can see that these candles do play out quite well, but I think this one is the best of them all actually here. And if we put the 8 EMA, you can see how critical this 8 EMA is, that once we'd broken through it in January over here, we found very good support, and once we lost it last week, just in 1 day we've recaptured it and come back all the way up to the 8 EMA support once again. So I would expect with this particular candle giving us that information which I've just said to you, we should expect a big move to the upside to retest this neckline at the 25,200. It's all now making sense with this move down here. So what we've now got is the right shoulder, and we were wondering how deep this was going to be. So this marker, this weekly candle, has now set the marker that this is the line in the sand now for the right hand shoulder. I would be surprised if the price now goes below this particular line here at 19,500. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.